Hello, everybody, and welcome back to another segment. Today I have Tom Hickey from Farm Lending Canada. Tom, how are you?
I'm great, Tracy. Thanks for having me.
Good. I'm so excited to be having this conversation about something exciting in the marketplace, hobby farm lending. So before we dive in, do you want to tell us a little bit about yourself and share your background in the mortgage space?
Sure, thanks. My name is Tom Hickey. I'm the Senior Vice President of Business Development at Farm Lending Canada. I joined this organization in September 2024. um, when we had recognized that there was a really underserved market in rural communities and that hobby farms and rural homes weren't being serviced properly. I got excited about that opportunity. So my background has been in alternative lending and serving alternative markets for the last 30 years. I know I look like I'm 22, but I'm not. I have a little bit more experience in that. So I'm here really promoting our product across Canada to Canadians that are interested in living in more rural communities.
Excellent. That hobby farm mortgage has been a weird space. There's agriculture lending and residential, and we've even had an issue with that. You try and buy that rural property, it just doesn't work well because there's too much land, too much value, not enough house. So I know you're going to go into that, but when I heard that this is now something that's available, I'm like, fantastic. Let's talk about it. So do you want to let's set the stage for the conversation. What qualifies as a hobby farm?
Well, I mean, for us, a hobby farm is something that has, some agricultural components to the property, and that component might be a barn or a field or a house or a coop. But the reality is it's not really an active farm. It's just a property that happens to be rural. And I mean, you hit on it there when you talked about it being between agricultural and residential. There are plenty of people, and we saw this really particularly since COVID, where people really wanted to get out of the city and kind of get their own space. And they were looking to buy these properties that, a beautiful home on a 5 or 15 or 50 or 100 acre property that wasn't really an active farm, but it had agricultural components to it, whether that was a barn or maybe some hay at the back or a coop or a pen. And traditional banks that were selling on just residences often don't like what that looks like. When we define a hobby farm compared to a commercial farm, it's a pretty simple metric for us. We're using gross farming income. So for us, we're looking at a property and saying, well, does that property generate farming income? And if it does, how much farming income does it generate? If it generates less than $20,000 in gross farming income on an annual basis, that to us is what we is qualified under our hobby farm or rural residential product. If it's greater than $20,000, we still have products for that, but that is more of a commercial entity and a commercial file that we're looking at in that space. So the simple definition for us is a property on acreage outside of town, often on well and septic, but the income is a driver. And when that gross farming income is less than $20,000, that makes a deal for us eligible under the hobby farm type lending that we're doing.
Okay, perfect. So you touched on this, but let's dive in a little bit deeper and then walk through step by step. Acres. How many acres are allowed under the hobby farm program? Do you want to touch on that again?
Yeah, so I mean, there's really not a cap. We've done properties that are 1 acre hobby farm properties, and we've done 300 acre hobby farm properties. What we're typically seeing is usually properties in this space are kind of 30 to 150. It really, and some of that is provincially dependent. So we lend across Canada in every province with the exception of Quebec. And so I sit today in Chatham, Ontario. In this area, a hobby farm often is kind of 15 to 50 acres. Whereas when we're in BC, what would be considered a hobby farm probably is more 120 to 130 acres, and it's typically ranch land. But from a maximum, we don't have a maximum. Would
Okay.
we would we be kind of weird if someone said I have an 8,000 acre hobby farm? Yeah, that'd be a bit different. But we don't see that, to be honest.
Okay. Okay.
Yeah.
Well, then that makes sense. Okay. So then the next one you touched on a little bit is income. So what types of income documentation are required for hobby farm lending?
So when we're looking at these properties, the piece that we do different than other lenders is that when we're evaluating a hobby farm, we take all the value of all the land into the valuation of that property. And the reason I'm bringing that up is that that's where we're different. Where we're not different is how we're evaluating the borrower. So the borrower, we evaluate using fairly standard income verification. So if your bank asks you for a job letter, a pay stub, or bank statements to validate your income, on that part of our evaluation and how we're looking at at borrowers, we're very similar to traditional banks or credit unions, but where we're different from that bank or credit union is how we treat the actual property. So I always talk to our mortgage brokers we talk about, and I say, look, we're very kind of vanilla on how we treat income verification and pieces like that because we want to make sure that the borrower really can qualify for the mortgage. But we're extremely Neapolitan when we're taking a look at property. We're very happy to take that farm with an outbuilding and all that land that your traditional bank is not going to take a look at for you. So we're Neapolitan on property and vanilla on income verification.
Nice. Step back a second, and I'm trying to remember back to when we were looking at a similar property and where the value comes in. You said it, but I want to re-clarify and jog my memory again. So when you go to a bank, typically agriculture lenders don't want you unless you're in farming. So then you're going to the bank and you're saying, I found this beautiful rural property. So then, as we know, let's say there's 100 acres on there, but it's marginal. Nobody wants to buy it for farming, but there's now all that land value attached to 100 acres. So that
Yeah.
ups the price, right? But you want it for the nice big house and then to have a horse. But the problem is the price of that property normally matches that land value, but traditional lenders, they just take the house and what is it, like 5 to 10 acres? Is that right?
Yeah, I mean,
Okay.
it's funny, Tracy, as you're saying it out loud, you're reminding me of one of my favorite deals that we ever did. And sometimes the best way to answer a question is to give a description of an actual transaction that we did. And this might be very similar to yours. So, about 18 months ago, we met a couple outside of Peterborough, Ontario, in a small community called Warkworth. Um, if you were sitting in the middle of Toronto or in Calgary, you would have said, well, Warkworth is a tiny community. I don't even know where the heck it is. It's a lovely community. They wanted to buy a property that had, when you look at the YouTube video that the realtor put up, it was rolling hills, beautiful grass, a gravel road out front, a lovely kind of early 1900s farmhouse, and then this beautiful 40 by 80-foot barn with a concrete floor on the side of the property. And the borrowers were two teachers. They had really good credit. They were really, really good borrowers and good individuals. Their bank had offered them 65% loan to value on the value of that property plus 5 acres in it, which really limited the amount of money that they could borrow on that property. We were able to offer 80% of the value of the house plus all of the land. So this was a 35-acre parcel. So there was 30 acres in this particular case that was added back into the value. So instead of when we calculate how much mortgage we can lend out, you're taking evaluation and you're taking your loan to value. So this property was sold, I think, for about $900,000, and we were able to offer $720,000, so 80% of that 900. Whereas the bank at the time was offering about 550 based on a 65% and the 5 acres. So it was our advantage is really we're really comfortable lending in more rural locations, particularly to great borrowers. Like, why didn't they deserve to have access to that type of fund and to buy that home that they wanted to buy? Uh, the other difference is that when we're doing that evaluation, you were absolutely right when you said the house and 5 acres or 10 acres. Different banks have different metrics, but that's a very common one in the big five. There are a couple of Western Canada lenders that will include 20 acres in the valuation. We include all of the acreage. So 5, 10, 15, 20, 50, 75, 105. That acreage is included when we're valuing the property. But the other pieces, we include the value of the outbuilding. So if that barn is sitting on the side and someone has spent $75,000 to have that barn erected, that $75,000 is in the valuation. If I'm going to buy a property on 30 acres, I would like a nice barn. I want somewhere to put my ATV or my car or my hobby, whatever it is I'm doing, or my work truck. I want that space available, and we think that there's real value in those outbuildings to be kept in the appraisal that we're performing on the house.
That's brilliant. And when we were talking about this, when I found out about this, I was excited, one, for our whole marketplace, right? But there was really a buyer that got the short end of the stick, if you don't mind me saying it that way. And I
Yep.
know we've had that situation, and a bunch of our friends farming, non-farming, different situations. Same thing. They went to the bank. They're only going to borrow on this, but there's all this land valued at this, just like you said. So walk me through that, Tom, because I think that's a value in talking this through to the audience is that couple, when they went to the traditional bank, I think you said 500 and some thousand, and
Yep.
then it was worth X, and you guys borrowed up to,
We
say
were
that again.
$720,000 in the deal. So it just meant that they didn't have to have the down payment to make up the difference. So, and if you'd like to buy a $900,000 home and you've only got $200,000 to put down, they could well afford a $700,000 mortgage, but the large bank had restricted the amount of lending they would do simply because of the location and the style of the property being an agricultural property. So it was, in this case, I mean the YouTube video finished on the picture of the horse in the barn. And frankly, we know when that happens, there are many lenders, particularly when they're being underwritten in a downtown Toronto office, not to pick on downtown Toronto. I've done this myself, but it's that's an agricultural property. We cannot do that, or we're going to really restrict our lending because the impression is that there's significant risk attached to that. And we're of the absolute opposite opinion. We love the fact that we have rural properties that we can finance. We understand the fact that people really do fall in love with the rural nature and the rural landscape and the rural property, and we've had no issues, frankly, from a delinquency or ability to pay perspective because we do all the same other underwriting,
Yeah.
same types of customers, same types of income verification. All of that is what we call the vanilla side of the equation. The Neapolitan is that we're really thrilled to take on a much more beautiful property that is a little more rural and maybe has space for a horse or some goats. Great, some chickens. Awesome. I mean that's the whole point of that.
Well, and I love that because that couple, and I love that you gave an example because that actually really brings this conversation to life in my mind. So look at that example. You said 900,000, bank was going to do 500 and some. That's a $400,000 gap. So
Yeah.
I'm going to guess, I don't know your clients there, but for most people, there ain't 400,000 that they're going to take and put down on the mortgage. So for most people, it's, oh, we can't buy that property.
Yeah, you're actually forcing those individuals to move back to the city because
Yeah.
in the city they could have gotten the same type of mortgage that we had offered.
Oh,
They could have gotten 80%, right? They were very qualified to buy a
yeah.
$900,000 home as long as they were in a detached home on municipal water with a 30 by 120-foot lot. Would have been perfectly fine for the bank.
That's the
Didn't
other.
match didn't
Yeah.
match their needs, right? But
Oh my
it's
goodness. I didn't even
yeah,
think of that. And that's why I was going to say they can obviously afford the mortgage, but
yeah,
this bank and this bank, we're saying we just don't want you because it doesn't work. So thank you
yeah.
for walking through that. That makes it really comes to life when you put a scenario to it. So thank you about that.
Thank you.
Okay. So two things you touched on, but again, I like to walk through step by step. So the borrower, in that case, the couple, I assume they're living on the property. This is a primary house, right?
Yeah, for the most part, 95% of the deals that we do are properties where people are planning on living in the home. We
Okay.
will take a look at rental properties. It's just not frequent. If you're going to buy an investment hobby farm, it's a little bit of an unusual transaction. We will do them and we'll take a look at them and assess them. But the vast majority of files that we're doing are people who want to move to the country or want to maintain a life in the country and not in the city, and they want to be on that property themselves. We do see some homes, though, and you're seeing this even more these days with the way the cost of housing has gone, is we're seeing people who are having more than one home on the same site. And so we've seen really really nice files where there's an older home and a newer home been built, and that second home becomes a rental property, really to support the payment because just simple math. It's not easy to afford a home today in Canada, and so we're seeing a lot of these two-unit homes that come up, which is another spot that we play in that we love playing in because what else is better than having your other income sitting, 100 feet from you or an acre over from you right beside you, your own little kind of rental area in that spot.
Yeah, that's nice. Okay. The next thing I wanted to ask you about. So these properties, like you said, can have hayland. There is income potential. Will you
Yep.
take the agricultural income into the application above and beyond their job income?
Yeah, I mean, so we started off with $20,000 being our kind of cap, and so if we were doing a transaction where there was, I'll make it up, there was $3,000 of income from eggs being sold at the end of the driveway, and we could validate that income, then great, we can take that income into consideration when we're doing our evaluation of the borrower's ability to pay. So the answer to that is yes. It does have to show up in your tax return. So if it's cash income or it doesn't show up in the tax returns, it is a little more difficult. I mean, I don't want to wink, nudge, nudge, but I think sometimes that doesn't show up on tax returns. We the other one we see a lot of is lease agreements between a local farmer and the borrower that owns the land. So, I'm sitting on 50 acres. I live in Chatham here, so if I'm on 50 acres in Chatham and I don't use the 50 acres, well, that would be a shame. But the farmer behind me he's very willing to put hay on it, and maybe for compensation, I'm getting a couple $1,000s a year and some maintenance on the land. The land's getting used properly. That we can take into consideration too when we're evaluating the deal. So the short answer is yes.
Okay, perfect.
Okay.
Another technical one, is there any zoning concerns? What zones are acceptable for the hobby farm mortgage?
Yeah, I mean, zoning is a big question on lending because there are credit policies that are kind of like wide swath brushes. We will not lend on commercial zoning. We will not lend on agricultural zoning. You get that from kind of large, typical A banks, I'll call it the big five, and so you do see that anything that's zoned agricultural or and I'll it's a little bit different by province. So Ontario it's an agricultural zoning, and BC it's ALR, and Alberta it's we see country residential, and some of these zonings get either disallowed or restricted lending parameters against them. At farm lending, we have no restrictions. We're very happy to lend on anything zoned agricultural, anything zoned rural, anything in the ALR, anything that is zoned country residential. What we're looking at is the use of the property permitted. So, does the zoning permit a residential use? And if that happens, we're perfectly okay. So, zoning is not a big concern for us as long as the use is permitted within that zoning. And you will find that in almost all um, kind of agriculturally related zoning, residents are permitted. It's zonings that we would not be comfortable with would be things like industrial or just kind of
Oh,
weird zonings that would be different, uh, airport zoning, those types of things. But for us, 99% of zonings are great. Where you'll find that at your bank that, you know, if it's zoned ag, you're going to get a cutback on the loan to value, and sometimes they won't want to do the loan at all.
okay. Okay, one more limitation question. Are there limits on outbuildings, animals, farming activity? Do you want to speak a little more to that?
Yeah, no, I mean, look, if you have 400 head of cattle, we're probably going to tell you that's not a hobby farm. So there's no limit. But if you want to have goats and chickens and pigs and horses, great. No, so there's no limitations on what you can do with your hobby farm. The real limitation is around the income you're going to draw. 1,000 or 700 head of cattle, that it's going to raise some questions. We're going to ask you about that. Like, really, you're going to have 700 pets? That doesn't make a lot of sense to us. So it should make some common sense.
Yeah.
Um, but no, there's no real cap. Just the real cap is, like, does it make sense from a true hobby farm or just a rural residence type perspective?
Okay. And I think step by step walking through this, it kind of paints a picture. One
Yeah.
last call out because we are the largest farm real estate website in Canada. So we have all the big farm properties, right? All the land, all those properties. We have the acreages, we have the hobby farm. Who is the ideal client for the hobby farm product? Do you want to give one final call out on that?
Sure. I mean, so particularly since COVID, almost any walk of life is interested in living rural, but the borrowers we see a lot of often are self-employed people. So I am a self-employed person who needs space. I need to park my truck. I need to have my landscaping equipment. I need to have other things on site that I want to access for my business. So often self-employed people that are typically that have grown up in rural areas, smaller towns, and then occasionally we'll get people like those two teachers who live in the city their entire life and they're fed up with their neighbors and said, "That's it, I'm getting out of town." And we've seen a lot more of that, frankly, since COVID time, where people just said, "Hey," and with the advent of, better internet and access to connectivity, people are venturing further outside the city, which I think is a great thing.
Yeah, absolutely. Okay, that is lovely. I am so excited about this product because of the space I'm in, agriculture, but also the real estate end. Personally, because we've been affected by this gray middle area where there's no product to support that mortgage. And I know friends of ours have. So that's really exciting. And I'm glad to be bringing this conversation to our audience. Let's do some final thoughts. If there's people in the audience, do they contact you directly? Do they go to a mortgage broker? Touch on that, and then we'll do a final call to action.
Sure. So, I mean, to take a look at us, we're at farmlending.ca. You can take a look through our products and our people. You can see my mug up there with a nice suit on. If someone's interested in getting a deal done, the best way to reach us is through a licensed mortgage broker. We distribute our products in every province except with the exception of Quebec. And our mortgage brokers across Canada really do understand how to evaluate an application and how to find us. If you are not familiar with a mortgage broker, or you want a helping hand finding one, we're more than happy to recommend a mortgage broker in your location too. So
Perfect. Tom,
farmlending.ca is the best way to find us.
okay, perfect. Thank you. And what we'll do is we'll include the website on the show page. So if you're watching, listening, go to Farm Marketer. If you don't have anything further to add, I want to thank you for taking the time and sharing about this so badly needed mortgage product for the space that was that gray area. So thanks, Tom.
Awesome. Thank you, Tracy. It is nice to operate in a spot that is, frankly, a really honorable job. I've been in lots of lending spaces, and this one feels pretty nice. I do think we're impacting people and helping people get mortgages in a better way that they maybe had difficulty getting in the past. So thanks for having us on.
You are so very welcome. You in the audience, if you enjoyed this, like it, share it, and get it out there because the marketplace needs to know about this valuable mortgage product. So if you enjoyed it, share it, and we'll see you on the next one. Bye, guys.